All right, let's shift gears now and go to a different conversation here, Bill, with the way things are in the market. And it seems like, we are seeing some different trends, some different ways in which people approach financing, right? So some different kind of trends have popped up during this, I guess, period that maybe weren't around 2 or 3 years ago, correct?
Yeah, so typically when rates are really, really low and things are affordable and underwriting is all in line because of the low rates, you're usually just dealing with most of your basic Fannie Mae, Freddie Mac, FHA-type products. And when rates go up and the ratios don't work and we need to look outside the box, or we want to consolidate debt and try to not touch the 3% low rate first mortgage, now we look at different options to still help with people's needs. And there's some products out there that are really well suited to do so.
So we're going to talk you through those here right now on the show. Again, if you have questions for Bill, 484-352-4151. And again, take advantage of the free mortgage and loan consultation. It's very simple. You can get on Bill's calendar and begin talking about these things and look at some of these options, right? I mean, part of that is the discovery process in terms of what products are out there for you that potentially can fit your situation, but before they can provide you any kind of guidance, they need to, of course, learn the details and what your goals are and kind of what position you're in. So something to remember. But what's the one loan, Bill, you were kind of talking to me about it before we got on that I'd never heard of, the DSCR loan?
Yeah, so DSCR is a really good product for anybody who's looking to buy an investment property and they've got some money to invest. You're going to need 20% down, and which is pretty standard for any investment property loan, but maybe you don't have the income to help qualify. And you want to be an investor and you're really interested in building a portfolio. This product, DSCR stands for Debt Service Coverage Ratio. And what that means is they're not looking at your W-2 or your self-employed income at all. They're looking at funds to close, got to have decent credit score. Most important though, they're looking at how does the house that you're looking at, how does it debt service onto itself, meaning a 1-to-1 debt service ratio, which is favorable with these loans, means if the mortgage payment's $1,000 and the rent is $1,000 that you could expect per month, that's a 1-to-1 ratio. So that the bank is comfortable with that because they can see that the rents can pay the mortgage. So they like that. You get a better rate if it's 1.25%. So the rates vary based on that coverage ratio. So if the mortgage payment's $1,000 and the rents are $1,250, you're actually going to get a better rate because that's a less risky proposition for the lender. And you could also go the other way. So if the rents are $750 a month and the payment is $1,000, that's a 0.75 DSCR ratio. That loan is you're still able to do that loan. They're going to want more money down and they're going to charge you a higher rate. There is actually a product that's a no ratio where they don't look at that DSCR coverage ratio at all. They do require more money down. The loan has to be better collateralized in order to do it. But main point here, Ben, is there's a lot of really good options for investors right now, and these have been more popularized because of where rates are.
Yeah, this is, again, kind of focusing on some things that have maybe risen in popularity that maybe weren't as popular a few years back because the market conditions really didn't call for that need. Another kind of situation that people are often in right now too, Bill, is your first mortgage, you got a great rate, right? A great mortgage rate. You don't really want to touch things because you want to keep that number locked in. But the other problem people are facing, right, is high consumer debt. That seems to be a pretty common trend across the country right now as Americans are taking on pretty high levels of consumer debt. So there are some options out there, right, that can kind of help you consolidate the debt.
Yeah, so again, as you've mentioned, in a low rate environment, you'd put it all under one roof in your main first mortgage. But in this market, a lot of times, and we do a lot of help with debt consolidation because, we're looking at overall financial picture. It's a holistic view. A lot of times we're working with our clients' CPAs and financial advisors to figure out the best plan. And sometimes right now, or I'd say more often than not right now, the first mortgage rate's at 3%. We want to consolidate some debt, but we don't want to disturb that 3% rate. So we might look at a 8 or 9% second mortgage. But what happens is if you're consolidating 15 to 20% interest rate credit cards, or you're pulling a car loan in there and you're stretching it out, you're creating cash flow. And a lot of times what we see is if you take that cash flow and roll it back into the loan, you can pay the loan off very quickly. So pivoting from that first mortgage where you would roll it all into one, now we're looking at a first mortgage that you already have, leave that alone, add the second mortgage, home equity line of credit, or a home equity loan, depending on your situation. And that's the kind of thing we'd need to talk through and better understand. But now your blended interest rate of all your debt is a lot lower than the blended rate with all this high interest rate credit card debt.
Makes sense. And is that an option that's mainly tailored to people that are already working with cross country, or can somebody come in with a loan elsewhere, let's say, and come in and talk to you about this option?
Yeah, so we can help anybody from any walk of life, and it does not need to be somebody who's just closed a loan with cross country in the past.
Okay, good to know. Well, if you are curious about any of these options, again, go to smartmortgageshow.com. You can call Bill at Cross Country at 484-352-4151. Anything else, Bill, you wanted to add to this? I know these are two options that are out there now that are maybe more common now than they were in past years, but is there anything else on your radar?
Yeah, so just that in general, when you're working with a mortgage company, you want to work with a company that's asking a lot of questions to understand exactly what your scenario is. Sometimes our answer is don't do anything because there just isn't a good solution. Trying to just fit somebody into a solution just for the sake of closing a loan is a really bad practice. So just make sure, with us, if you call in and we discuss your scenario, we're going to look at it from all angles, make sure that we're helping you make the very best decision possible, because it's a big debt encumbrance on your biggest asset. So there's a lot of care and detail that should go into those decisions.
I think that's important to remind people because, when you throw out, hey, you can get a free 15-minute mortgage and loan consultation with Cross Country and Bill Litton's team, the idea might be, well, they're just going to try to sell me on a product. But the truth is that's not the case, right? It might even be a result of them saying, hey, maybe this isn't the best fit for you right now, or maybe you should explore some other options that are out there that you hadn't thought of yet.
So there's a good part of what we do is to build a plan if we can't help you, or prepare for a better time when it might make sense to implement one of these strategies, or send you to another lender that is better qualified or has a product that we don't have, because we don't have every product. We're blessed with Cross Country. We've got a lot of product, and we can solve a lot of problems, but we don't have everything. So there are times that I would send somebody to somebody down the street that could better serve the customer, and that's always the goal.
That is always the goal. So if you want to take advantage of that free 15-minute mortgage and loan consultation and learn about these options and whatever else could potentially fit your needs and wherever you're trying to get, whatever home you're trying to get into, whatever your goals are, again, 484-352-4151.